3 SPAC stocks or special purpose acquisition companies for February 2021. These are 3 under the radar pre-merger SPACs that are still in their searching phase that I believe have great management teams. And at the time of this video, they are trading below $11 per share. In full disclosure, I do have positions in all 3 of these blank check companies. We're going to go over these 3 SPACs right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, let's get right into it. The first SPAC we're going to talk about is DD3 Acquisition Corp 2. On Fidelity, the tickers are DDMX for the common stock and DDMXW for the warrants. This is a SPAC that I talked about in a previous video, so I won't go into detail about it here, but here's a reminder of why I like it. This same SPAC team took Betterware de Mexico, ticker BWMX, public last year in a SPAC business combination. BWMX is up over 300% in less than 1 year, trading for over $40 per share. So this SPAC team has a track record, which is one of the top things I look for when investing in SPACs that are still in their searching phase. According to their prospectus, they may pursue a business combination opportunity in any business or industry they choose. However, given their expertise in Latin American investments, I do believe that they will pick a target from Latin America. Dr. Martin M. Werner, the chairman and CEO of DDMX, was a managing director and partner at Goldman Sachs. Jorge Combe, chief operating officer and director, was also a managing director in the investment banking division of Goldman Sachs in Mexico City from 2010 to 2017. This SPAC IPO'd in December of 2020, and they have 24 months to find a target. I already have a position in the common stock and the warrants, and I think that the common stock is a good buy under $11. Once it gets over $11 without a target, I would not be as interested. The stock closed at $10.39. My cost basis on the stock is $9.55 from when I separated the SPAC units, and I just plan to hold until a target is announced. The warrants closed at $2.32. I personally would not buy the warrants at this price. I think they would be a good buy under $1.50. My cost basis on the warrants is $1.45. My plan with the warrants is just to hold until a target is announced and then reevaluate. If for some reason there's a market crash and the warrants go below $1.25, then I may consider picking up more warrants. But I'm going to cross that bridge if and when it comes. These warrants have the typical $18 and $10 early expiration terms, so as always, be aware of any early expiration of the warrants. If you're brand new to warrants, be sure to check out my SPAC Warrant Basics for Beginners video, where I answer a lot of the questions that people have about SPAC warrants. Because of the previous success of this SPAC team, I'm looking to get a 2 or 3 bagger return out of this investment. That's the goal, but of course I'll have to reevaluate once a target is eventually announced. On to SPAC number 2. This is another SPAC that I talked about in a previous video called CHPMW Corp. On Fidelity, the stock ticker is CHPM and the warrants are trading as CHPMW. The main reason I like this SPAC is for its chairman, Joseph R. Swedish. He is a senior advisor to Anthem Inc., a a leading health benefits provider where he previously served as executive chairman from late 2017 to his retirement in May 2018. Before that, he was CEO of Anthem from 2013 until late 2017, and chairman of the company's board from 2015 until 2018. In the 4 years while he was CEO of Anthem, the stock price more than doubled. Even though there isn't a SPAC track record, there is an exceptional business track record, which is why I like this SPAC. Although they can target any business, I expect them to target a business combination in the healthcare sector. One thing that is a little concerning to me is that Joseph Swedish is party to a non-competition agreement that will limit his ability to serve as an executive officer in a target business and could limit the company's businesses that they may target for an initial business combination. Which is another reason why I think it's so critical to buy the SPAC as cheap as possible to limit downside risk. This SPAC is nearly 15 months into its searching phase and is expected to complete a business combination within a total of 24 months. So I expect them to announce a target anytime now. I already have a position in the common stock and the warrants. I think that the common stock is a good buy under $11. Once it gets over $11 without a target, I would not be as interested in the stock. The stock closed at $10.42. My cost basis on the stock is $10.41, and I just plan to hold until a target is announced. If there somehow is a market crash and the commons go below $10 before a target is announced, then I will strongly consider buying more stock since they should have $10 per share held in the trust according to the prospectus. The warrants closed at $1.90. I personally would not buy the warrants at this price. I think they would be a good buy under $1.50. My cost basis on the warrants is $1.27. My plan with the warrants is just to hold until a target is announced and then reevaluate. If for some reason there's a market crash and the warrants go below $1 before a target is announced, then I may consider picking up more warrants. On to SPAC number 3. This is a SPAC that I haven't talked about before on my channel, but I have been talking about it for a while in the Discord. If you're in the Discord, you know that I really like this SPAC. And that SPAC is BlueRiver Acquisition Corp. This SPAC IPO'd this month and is expected to find a business combination within 24 months. On Fidelity, the ticker is BLUA.U for the units, and the common stock and the warrants are not yet trading. If you want to know more about investing in SPAC units, be sure to check out my latest video where I answer a lot of questions people have about SPAC units. The reason I like this SPAC is because it has ties to Bill Ackman's hedge fund, Pershing Square Holdings. And if you've been following me for a while, you know that I'm a big fan of Bill Ackman. I made several videos about Bill Ackman's SPAC, PSTH, when it was still trading for under $22. PSTH, as many of you know, is now trading at around $29 and still without a target. One of BlueRiver's director nominees is Ann Farlow, an experienced private equity investment professional who currently serves as non-executive chairman of the board of Pershing Square Holdings Limited. She has been the independent chairman of Pershing Square Holdings Limited since 2014. This SPAC is expected to have a focus in the technology, media, telecom, and entertainment industries. I currently have a position in the BlueRiver units at a cost basis of $10.47. The units closed at $10.57. Each unit contains one common stock and 1/3 of one redeemable warrant. I think that the units are a good buy under $11. Once the common stock and warrants become available for trading, which I expect to be around late March, I will consider picking up more warrants if they are trading below $1.50. I don't plan on buying any more common stock unless there is a market crash and I can get them for below the $10 per share that's in the trust. And like the other two SPACs, I plan to just hold until a target is announced and then reevaluate. All right, so just a few announcements. The Wolves of Investing Discord is growing and is my favorite place to discuss SPACs and other stocks with other members of the community. We have over 400 members, and if you're interested in joining, it's completely free. I'll leave a link in the video description. Second, I just started my very own Patreon. If you're interested in getting alerts from when I make a buy or sell from my Fidelity All SPAC portfolio, it's only $5 a month to sign up for my Patreon. And there's a higher tier available if you want additional insights into my portfolios. And if you want to get a shout out on one of my videos every month, I also have a tier for that. So be sure to check out my Patreon if you're interested. A link is in the video description. And just want to remind you all that through the end of February, M1 Finance is offering a $30 sign-up bonus. If you sign up with my link in the video description and deposit $100, both you and I will receive $30. The normal sign-up bonus is $10. So those were my 3 pre-merger SPAC picks for February 2021. Let me know what you think about these 3 blank check companies and what other SPACs you're watching. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.